Hello and welcome. Today is the fourth day of June 2019. My name is Derek. This is the Money Charts channel. All bets, trades of the like within each own risk and their own reward. Let's take a look at gold and silver. For me, 100% of my gold and silver is in physical form in my possession. I don't play any of what they call the paper game, digital game. I mean, these markets, I guess, reflect the price of gold and silver. I mean, it kind of does within the metal. You buy it, they're gonna take. Oh, okay, the price of gold is 13.25. Okay, I guess I'll sell it to you, announced you for 14.10 or something of that nature. Yeah, let's just find what's 10% more than what it is now, or 9% more, and that's what a lot of them go by. But as it is, we have seen within price action, starting off with gold. There's the uptrend, 18 average going higher. Every single time within the uptrend that it came down to the 18. It corrected. It came down to the 18 here, leg higher. Back to the 18, leg higher, lifting off again from here. Comes down the 18, leg higher. Comes down the 18, leg higher. Comes down the 18 and fails. Lower low. Comes up to the 18, attempts to regain the trend, but when it comes back down, it fails. A little small attempt here. After a matching low, this time it's a lower low. You resist the 18, but you're unable to make a lower low. You make a matching one. Failed breakout here, and it just comes back to another matching low, and now another breakout. It has not done anything to correct via price or time, at least back to this 18 average by any means. As far as today's action, well, it was three consecutive days up. 2/3% on the 30th, on the 31st, or on Friday, it was up 1.3. Yesterday's session up 1.5. Today's session, a break even day, technically up 8 cents. Yada yada, nothing moved, but a yada yada hanging in there. Yada yada, pause day. And that'll be the last time I say that for at least two or three sentences. The word beginning with the letter y, words beginning with the letter Y. But so anyway, that's the close of the day, holding in there within this key Fibonacci. And this key Fibonacci is a very large situational point. When we look at this on the monthly term time frame, and again, I need to show more periods. A beautiful uptrend, 18 low support, 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 supporting the highs all the way through, supporting the lows, not breaking it, then the breakdown. All of this downtrending movement to the low here in 2015. And since the low, okay, attempt to revert the trend, resume the trend, whichever way you want to look at it. It ultimately doesn't do it, but it hits this established point in here, and this is the Fibonacci from this high to this low. So as you were calculating it, every time it made a new low, these lines would go down in correspondence with the new low. So as we're moving up in here, well, the low of $1,046.54 stays constant, as does the high. So it just happened to work within this Fibonacci, piercing extra, coming back to the 18, piercing below, no big deal. Did it hold and stay above it? It most certainly did. Retesting this level, but not getting above it. Having a correctionary phase on the December month of 2017, comes down to the lows, but it rallies at the end of the month. And then for the first few months of 2018, again attempting to take it out, but not quite doing so. Pullback, and this time a decent one, about a half a dozen or another single more maybe, of moves down to this level. And then it goes up again. This is the start of this year. Right back to that Fibonacci. And it's another attempt over and over and over again. But it's doing so with higher lows. For from this one, we had this low. And then amongst this move, it had higher lows along the way. And then this low is higher from here. And so far, this low, if this happens to be it, they're known after the fact, is this one. Because so far, this might not go above. Maybe we come down the 18 lows and even pierce below it to like 1217 or 1209. That would still technically be a higher low if that situation occurs. But I've been waiting for quite some time. I guess you could say now for about 3 years for this breakout pattern to come into play. And it's like, oh, okay, just something like a technical analysis setup that's been live for 3 years. That's just crazy. And I think the more longer it goes, the more likely it is for the faster and the maybe more explosive moves. As we take a look at this against the Canadian fiat debt note currency, and within its monthly chart, I'm just gonna I'll scroll it off a bit. This line, I mean, it's at the same sort of resistance line. There's no horizontal ray here, but this is most certainly. eh, I mean, it should speak for itself. I can draw a little bit. I mean, it's not going to be straight lines by any means. But this entire ascending triangle, after what was the move before this? It was just this rectangular uptrend from the 2006 lows. And even before then, it was doing that more for even before that point. As it was bottoming in like 2000, 2001, about 250 American, which would have worked out to about 375 Canadian, 360 back in that time. It was about 40%, 42 in the early 2000s, more. But as this pattern lies, resistance, and it didn't pull back as much. It only came back to like 1276. What did the US fiat do? It came back to like 1046. Oh, and then this 2008 high at 12, it was 1070 or 1030, a little over 10,000 US. Here it was a little bit the same, just a little lower. And then gold bottomed in US at 700, here at 800 because of the currency stuff going on. And then, of course, now gold's looking to break resistance to get back to where it came from. On the Canadian dollar side, it's looking to break resistance to go hog wild into areas and elements it has never seen before. And now we look at the silver against the Canadian fiat. Not like the gold by any means, in many, many fashions. For gold, as a beautiful bearish setup of resistance it's been testing for quite some time, not really the case on silver, with the same, of course, fiat debt notes currency. As far as resistance lines, I can draw it like this, then I want to connect with the next high. And so far, it's just been unable to get out of any of this downtrend on the resistance side. On the support side, you had this support in here, then it came down to this little area, and we haven't seen those since, and so higher lows in here. And it's one of those something's got to give situations. Realistically, and in high probabilities, if gold breaks these levels of resistance, silver's going to follow suit. And how that works with the ratio is mind-boggling to tell, because I could see how it could work out in many ways, where gold can break out and silver can go stagnant, barely go up and stuff in that nature, and the ratio of gold to silver just keeps going higher. But then I can see situations where gold does break out from where was like 1400, maybe goes up 30%. And yet next thing you know, silver goes hog wild at the same time, but it goes up like 54%. Maybe it comes up and tests this level when gold has that little move. That might not be a favorite or probability, but it's definitely a possibility. And I do believe at some point there's going to be some wild, extravagant moves because of how much this market has been held down over what is now very close to a decade. And it's 8 years plus since, of course, that high. Let's take a look at this same chart, same time frame against the U.S. fiat. And amongst this one in here, we have these lows from $4, the high of 50, down, of course, to about 14. Now currently in at 1482 at the bottom end of this lower range. I got a couple sets of lines. This one represents this high and this low, so it. That's a Fibonacci miss. That was a large pierce below this. I don't even know if I want to call this a pierce, but either way, it's been staying completely bearish from point A high to point B low. If we factor in some Fibonacci, and I like to use the three, we'll do $4 levels, 4 and 50 we'll put in on the Fibonacci side, bring my calculator up. And I'm going to put this in cents so that because it automatically rounds. So we'll put 5,000 cents and 400 cents. So the key numbers are $19 and low and $10.50. So this $19 level has been an area where it's supported here, resisted here, and because it's been falling, you can say, okay, it looks like it's going to 10. You got gold having a signal. Oh, it's got a good pattern where it might go up big. But if you look at this on technical forms, well, if 19 was resistance in here, and it did just that after it had weak support. You have weak support, you go down, hit that level, now you're starting to retrace back. 18 average spent numerous periods in here, over a year it looks like. Well, it came down to it on October 2016 and it left it in June of 2018, close to 2 years. Just in this, and then it breaks down. Okay, it looks like we're heading down that 10 number. We match this support. Okay, are we going to have weak resistance? So far, yes, because it comes to the 18, and even amongst this Fibonacci from this high to this low, comes down, finds support, resists fib, comes down to fib. This whole move is within the two fib points. Then it leaves it, resists it, starting to go down. So most certainly, contrary patterns amongst both the monthly chart for gold and for that of silver. It does seem normal that if whichever pattern lives, if this breaks down and goes to like 10, then gold will break down. And if gold breaks out, this will go higher too. I only have to presume, but again, that is contrarily different. Weekly chart after coming down to this level, all you can see just fidgeting back and forth and continuously big move or continuously day after day going down. No up and down action like before is another way of putting it. On the break here for was July 2nd down to like September 10th on the weekly time frame. That's only a few weeks, a little over 10 or 12. And yeah, so within the stabilization, go back to where you came from. It's really important to hold and stay above this little area here I talk about. Where was the last key resistance? What would be a nice higher low? Now, technically, this is a higher low, but you just can't be too optimistic when you've seen that how it had this period of time from April 1st through about, well, the entire month of April, where it wasn't able to spark any rallies from that point. And then it gave in on that level. Well, that was the area it was supposed to hold. It didn't. It didn't lift off from that. Now you have a break below to where you didn't want to go, and you're in resistance area for this level, this area resisting where you came from. It doesn't look positive at this point in looking at that via the weekly. On the daily term, this is, well, now it's a little more clearer of how this looks, at least on a shorter term level. For with that being said, of all of this bearish activity on the weekly and the monthly, well, that just goes to show you how this attempt is very, very important. Markets go up, markets go down, all that type of stuff. And this is most certainly not shy or away from the candidate. And when looking at just a lot of periods, there's a key up move and down move along there. There's a up and down move twice here. There's a nice up and down move here. And then then from here to here, it's down, but a couple lower highs along the way, maybe three. And then from here to here, it's choppy. Resistance or supports in here, resistance is up here. I'd like to say matching lows and matching highs, but there's a few lower highs here. Primarily lower highs, and primarily dysfunctional lows. I don't know higher or lower. So yeah, markets go. This is markets going down. Market goes sideways. Market goes up. Market goes down. All those things. So now we've been in, of course, just that market going down for quite some time. We got a low, then we have a lower high, matching low, lower high to the 18. We just consolidated the low point for many a days, and then it barely makes a lower low. And then it makes another lower high to the highs again, and then another lower low. Back to the 18, another lower low. 18 lows, another lower low, and now it doesn't make a lower high. And for the first time since this downtrend began, it's made a serious attempt in getting out above the 18 or In other terms, that's been the first day where it closed above the 18, or excuse me, where the lows closed above higher than the 18 average of highs. For on this day previous, 18 average of highs came in at 1466. The low was 1466 as well, but via rounding, the 18 highs was 14.6547, and the low was 1662 on the change. Which, I mean, technically, it held above it and stayed above it for that day. That's the first time since in here that it's done it. And this is a nice sign to see, okay, you have this move, you haven't pulled it back. I mean, now this must hold area of about 1450 for the long term sake is massive. And it's got a long, long, long ways to go for the bad signals for the long term to definitely to destroy the negative bearish signs. But within this market, that you have long, steady down and up moves. It's been the case. Now it's showing signs that having one, two, three, four, like five different resistance tests and lower highs on the 18 might be over. Maybe now we'll have four or five different support tests of higher lows on the 18. Keyword is maybe, but for reversal of trend, stage one band flatten out. Stage two, established level of resistance. It's pretty much, yeah, I would say that qualifies as at least enough. And as far as this is concerned, one way that I'd like to do this is just do the best that I can to draw in the 18 average of highs and see if even this period qualifies for coming back to the band, because I can't tell by looking at this. And that's definitely going to be fine enough, because it's really, I just have to put the line in for where it is. But for this should work out. So let's take a look at this on the 4. It kind of is now when you look at it, because it came up to the 18 average of highs of the daily term on May 31st, 10 a.m. timestamp. Came back to its area where it was congesting. Had another shot to break it here on the 18 stamp here, 2 periods later. Paused it there. And then after retracing back within that period to where it came from on the 18 average of highs as well, and where it came from in here, we can see it got above it in this full period. Nice, nice, nice full move above it. And then it has a decent leg higher, so that if it has a good pullback, which it did right here, that's almost stage number 3 right there. Stage number 1 was all of this stuff in here with band flattening out. So you can see from like May 29th to here, this is all band flattening out. So stage number 2 would have been here at about 1483. Stage 3 would have been technically correct here. And stage 4 has not happened yet. That's a clear break of this resistance. And it's only had this microscopic break, but as of now. But it does give us the signs that if it does break it, that should tell me we're going to have a decent leg higher for this next leg higher, like 15 low change at least. Or maybe the possibility to 2.5, 3 more percent, which for silver is low volatility overall. But that's just the possibility. Still has to come back. And I'm now going to complete this video. Not much more to go over. I'd like to thank you for tuning in. Let's take a quick look at the hour. Nice, yeah, this is looking very positive heading into the session. I don't know if there's any type of news or Fed stuff. It's a Wednesday. I don't even follow that stuff anymore. For me, it's all about accumulating as much as these precious white and gold looking, actual gold metals are. And with these lower prices, that's all been fine and dandy, because when cryptocurrencies have good runs, that means it's a little bit cheaper to buy silver at $14.81 compared to buying it at, say, $29.63. Well, that'd be twice the cost, which means I get half as much silver when I buy. And I look at 28 as in like, okay, so be it. 28 would be like, oh, it's like way up here. But my expectations are Silver is the, and gold, but definitely silver more to me more so. It's the, and these are the only two items, gold and silver, that I can think of. The two items that I can safely say yes, put this in a secured, timed safe. And what I mean by that is secure as in it ain't gonna be stolen. And there ain't no fires, there ain't no anything else that's gonna, no normal type of fatalities that you can think of that's going to even destroy it as well. But you ain't opening it for 10 years. In 10 years, it's all yours. You could put 1,000 ounces or whatever you want to talk about for its comparison. You could put your gold in there. You can put your private keys to your any cryptocurrency or cryptocurrencies that you want. You can put palladium in there. You could put fiat currency in there. I guess you could put real estate grant deeds and all that stuff. If that, I've never done anything like that, so I don't know how that would be done. But whatever you could put in a safe, put it. I'm even going to let you have an extravagantly large safe. Say, for example, you think, okay, maybe I want to go ahead and put in 20 ounces of silver, or gold rather, or 2,000 ounces of silver. But maybe instead, I want to take, well, 20, I want to buy $28,000 worth of toilet paper and secure it. And I don't care if there's any major rains or fires or anything, this safe is going to protect it. And you know what? That toilet paper would have value, but would it, how is that going to compare in 10 years when we could have new innovations and better products coming out? How will that do in the future when you have situations of just that? But okay, situation of trying to sell it when it's, imagine having like 40,000 rolls of toilet paper and trying to sell it. How are you going to do that today? Just that's, oh, imagine having 200 ounces of gold. How, okay, that's easy to sell. A lot easier anyway. Oh, imagine having just like 10 Bitcoin, 5 Bitcoin or whatever. Well, that's easy to sell. But in 10 years from now, that Bitcoin could be worth a lot more. It could be worth nothing. Definitely the fiat currency, I don't see how it could be worth more. And it could have lost some value, 15, 20%, 30% purchasing power. And it could be worthless. And again, toilet paper. I suppose you could get into a situation where supplies and demand, where supply is unable to reach demand, and if that's a situation, then you're boss. But I guess that's the only reason you'd probably want to hold it. But in reality, the cost of storing it is a lot higher than it is with gold. And then you have one of those situations where you got your bug out vehicle. You're like, oh my goodness, it's we got a in this area, it's I don't know, maybe that's the floods are too bad, the forest fires are too bad, maybe you got this ice age coming, you got to head south, any of that type of stuff. See, if you got a safe full of gold and silver, that's a little easier. Even if you got like 4,000 ounces, that's not too hard to put in a truck. In fact, it's especially if you got a few hours to get everything in gear, which a lot of times you do, then it's pretty easy. And it's obviously easier to have like 40 ounces of gold or 50, 60 ounces of gold. That's just extremely easy. Oh, your private keys and your Trezor wallets, bringing whatever type of little bit of electronic devices and computers with you. Pretty easy. That's pretty easy to bring. Hopefully, you got some backup power ready and stuff like that. That should have already been part of your plan if you're doing bug out type of preparation. But if you have 50,000 rolls of toilet paper and it's time to bug out, you almost need a transport. And that might not be enough to fill your whole load. I don't know what a transport would fill, how many rolls. Again, the cost. So if you've been thinking about, okay, I got 50 grand, cryptos, maybe. Do we put it into gold and or silver? Do I just hold my dollars as is? Or do I buy toilet paper? Well, the first couple might be the idea. Maybe a little bit of both there and hold some cash. And you still want to have a bit of toilet paper anyway. And it's always not too bad just to have an extra 20, 30, or 50, 60 rolls or 100 rolls. There's nothing wrong with that. In fact, that's all good because that's not much storage space for 100. If you ever get in a situation where you could barter for profit, you got some. And if there's ever a situation where supply is lower than demand, you got a decent supply again, at least for just, well, again, for either trade or for holding on to. And you should never really run out because if you want 100 rolls and you get down to like 30 or 40, just buy another 100 or 60 or whatever it is to top it up. And it's been a very important subject. And some comments I have to go over, which are very important. And when I say very, I mean not, unless a new one comes in. Because I got a thumbs down here and 5 thumbs up on 29 views. Interesting trading strategy. I've done this with 2 other pairs. One got its ass kicked with only a 5x gain on its coins, and they were losing coins to begin with anyway. And then one did amazing well again. So it's an extremely high risk, extremely high reward strategy. But expose.org wants to know if you know so much, which I don't know what your definition of so much is, so I'm going to have to say no. And then where on earth is Nemo? I don't know. No. And just whom exactly is John Galt? That name barely rings a bell, but I don't really know who John Galt is. Thank you for tuning in, and these help for review, and luckily spam comes with nothing. So I can't even see what they're. No comments to the. Sometimes they'll come up and they'll be like a lot of real spam, or if somebody puts a comment, you put a link down below. It's probably going to get hit in here. I'm probably not going to look at it. And you might want to put another regular comment saying, yeah, I posted another comment with a link on it. But generally speaking, if you can find a way to put a link, like a Google search for a YouTube video or whatever, just say Google search this or YouTube search that, and that won't get held for review. Thank you for tuning in. Have yourself a great day. Bye bye.